the financial world in terms of Bitcoin was during the regional bank crisis last year, as the KRE, which is the regional bank index here in the United States, was absolutely imploding when Silicon Valley Bank and others went under. Bitcoin increased 40%. And, many people who just refused to look at Bitcoin said, wait a minute, what? There's nothing like price action in a bad market, good price action in a bad market, to elicit the interest of investors who were poo-pooers before. And so that's what happened, because for the first time, Bitcoin became a risk-off asset in their eyes. They had only thought of it as a risk-on asset.
The world is about to go through a huge technological revolution, which the IMF says could boost output right away. A blog post from January from the International Monetary Fund says that AI will affect about 60% of jobs in advanced countries and raise incomes around the world. However, half of those jobs may benefit from AI integration, which will make them more productive. AI will be especially disruptive for the other half. AI apps may be able to do important jobs that humans currently do. This could lower the demand for labor, lower wages, or even get rid of the need for human workers altogether. Several well-known experts and investors say that the coming storm can't be stopped. The only way to get ready is to invest in the multi-trillion-dollar opportunity. Luckily, a famous American investor and star stock picker Cathie Wood thinks she has cracked the code to help investors position themselves correctly for the huge opportunities ahead. According to research from Cathie's asset management firm ARK Invest, 5 innovation platforms are coming together to create growth paths for the world that have never been seen before. Cathie is very optimistic about Cathie thinks Bitcoin will be worth $1.5 million and Ethereum will be worth almost $200,000 by 2013. In a recent interview with OPTO Sessions, she talked about the coming technological and industrial revolution and how investors can set themselves up for huge gains. Here are some clips from the interview. Please like this video, subscribe to the channel, and turn on notifications. Please click the bell to see more movies like this. Thanks and have fun with the video.
Very volatile, does well in bull markets. But this was a very loud signal. And I think the SEC signal, the green light with the ETFs, our spot ETF, ARKB is one of them, did get more and more people thinking about what you said, Ed. This is a new asset class. So advisor community, you may not like it inherently, but you must take a point of view and tell your clients why you're not including it, because the history of new asset classes is that when you put an allocation into one of these new asset classes, into your existing portfolio, the return per unit of risk goes up because of the diversification and the low correlation to other assets. And so a lot more advisors and investors are taking it seriously now. Already always assumed that the spreads, especially in the retail sector, which were very high for Coinbase, were going to come down dramatically because of the Bitcoin ETFs. We didn't know how low the fees would be on the Bitcoin ETFs, but nonetheless, that assumption is correct. Anything that gets more investors involved in the ecosystem is important. The ETFs are a stepping stone for people who want to just get a toehold in. But as they learn more and more about Bitcoin, many will use this as a bridge into establishing their own wallets, which would be very helpful to Coinbase, so that they can participate more in other decentralized financial services. So we think this is going to be a feeder for Coinbase. Sure, there could be some revenue hits in some ways, but the approval of the ETFs, we think, will be a powerful boost longer term to pricing of all of these assets, which will be very good for Coinbase.
Research breakthroughs in artificial intelligence will be a great way for these platforms to grow very quickly, according to ARK Invests. The company thinks that disruptive innovations could add up to over 60% of the total value of the world's stock market by 2030, up from 16% of that value in 2024. It also thinks that the annualized equity return for disruptive innovation could be over 40% in 6 years, which would raise its market cap from about $19 trillion today to about $220 trillion by 2030. On the other hand, ARK's research predicts a more moderate growth for non-innovation platforms, which it thinks could go from $98 trillion today to $140 trillion by 2030. The company thinks that each of the 5 sites will grow at a different rate. 37% for AI, 50% to store energy, 48% for online ledgers. Robotics has grown by 78%, and multi-omic sequencing has grown by 39%. Let's go back to the talk with Cathie.
One thing, we've set up our research department so that our analyst responsibilities are organized by technologies. So they're tech specialists, sector generalists. So our portfolios, all of them, are much better diversified plays on disruptive innovation than you would get in sector tech funds. And one of the reasons is something you didn't mention, which is the multi-omic sequencing, which is going to transform healthcare as sequencing and artificial intelligence converge with CRISPR gene editing to actually cure disease. So our ARKK is our flagship strategy, and it will be soon, we hope, with regulatory approval in Europe, be heading for Europe as well, with our partner ARK Europe. So excited about that. And then we have more specialized portfolios. One is the next generation internet, which is focused on AI and blockchain technology heavily. One is the multi-omic sequencing revolution, or I think we still call it the genomic revolution. We have to change the title there, but that's ARKG. The autonomous technology and robotics portfolio, so that's autonomous taxi platforms, robotics, and 3D printing. That's ARKQ. FinTech, which is importantly crypto and blockchain technology, is an important subset. It may absolutely take it over long term, but right now it's a subset of our FinTech portfolio, ARKF. I think I didn't give you the ticker for ARKW, which is the next generation internet. So, and then we have ARKX, which is even more out there in outer space. That's our space portfolio. In terms of the public equity markets, we are the closest you'll find to a venture fund in the public markets. And that's because our portfolios don't look anything like the broad-based indices. In fact, the overlap is 5%, maybe 8% at tops. So you've got 92% diversified exposure to truly disruptive innovation, whereas the big broad-based benchmarks really are made up of companies that have been very successful historically, but may be disrupted. So we are a very good hedge against the possibility of that. So many use our strategies as a hedge against the disruption elsewhere in their portfolios. And others just allocate to us because they know from their own lives that we're talking about the way the world is going to work, not the way the world has worked. And just to close that off, when I was trying to explain to someone why I needed to start ARK 10 years ago, and this was someone not in our business, he ended up saying to me, so you mean that the future of investing is investing in the future? And I said, precisely. So it's a bit cheeky perhaps, but it is true.
Also, the trading volume of spot Bitcoin ETFs hit new all-time highs on Monday, which caused the prices of Bitcoin and other famous cryptocurrencies to rise sharply. BTC price rose more than 10% and reached $57,000 for the first time since December 2021. A short of almost $200 million in Bitcoin was broken up. Top altcoins like Ethereum and Solana saw daily gains of 6.5% and 10.4%. Eric Balchunas, a senior expert at Bloomberg ETFs, says that XRP, Cardano, Avalanche, and Dogecoin also had big days, with 5.78% and 12% rises, respectively. Monday saw more than $2.4 billion worth of trades for the 9 new Bitcoin ETFs, which was a new all-time high. His most recent report on X confirms it with $2.4 billion in trades today. The 9 new Bitcoin ETFs have broken the all-time record for trading volume. This is almost twice what they were averaging every day, and it just beats the record they set on the first day. Bitfinex's study shows that IBIT went crazy and made $1.3 billion, which was about 30% more than its previous high point. Monday was the third busiest day since they began on January 11th, with $520 million going into Bitcoin ETFs on the spot. The ETFs have gained $295,385 worth of Bitcoin in just 31 daily trades. It was worth $6 billion less than it was yesterday, when it hit a new low of $22 million. After 31 trade days, these ETFs are still going strong. What do you think will happen with Bitcoin and the other major cryptocurrencies today, tomorrow, and the next few days? What did you think, guess, or say about Cathie Wood's interview? Leave your answers below. Don't forget to click like on this video too. Thanks for seeing it. Please follow the channel and turn on post alerts to get more interesting market news.